All right, everyone, welcome back for another episode of Carnivore Trades. Today is Monday, March 14th, 2022. So markets getting hit again today, puking lower. We had a little move lower in the morning and then kind of a bear trap. Then we rallied up and then we put in a bull trap with this little blow off 10-minute candle into all these moving averages and then just selling ever since. Notice the VXX, the first hour and a half of the day here, really tight small range candles. And usually when you see that, the vol algo is turned off, and it's usually going to be kind of a neutral to upside day. But then see the range expand on this candle here, and that pushed us lower right there, and market sold off ever since. Look at the volume surge here on VXX, volume surge right there as well on that expansion candle. The interesting thing to note about VXX today, it's up 13%, was up 15% about 5-10 minutes ago, but let's take a look here. So VXX above this trend line again, and let's take a look at the actual VIX. That is only up 6% right now, and it's below this trend line. So a couple of things about that. You guys may remember back in November or late December, I was talking about the VIX being in contango, about VXX outperforming the actual VIX. And a lot of the time when you see stocks at highs and you see the VXX start to outperform, that can signal that a top is near. So essentially the VXX is pricing in future volatility versus the VIX, which prices in mainly just the front contract. So that can be the case. However, at the lows, let's look back and we'll go back to March 2020. When you see the VIX outperform at the lows, or excuse me, the VXX outperform at the lows, it's usually a sign that a bottom is near. So take a look at the last 3 or 4 candles here. It's still spiking higher here on the VIX, and it topped on 318, 2020. Now the VXX, same thing, but look at the last 4 or 5 candles. Boom, gap up, boom, gap up. Topped out on the same day, but you can see the VXX outperformed very much so compared to the actual VIX when the market was very close to a low. The reason for this is generally retail investors don't trade futures. So they trade, if they want to trade volatility, they trade VXX or UVXY. If you're a retail investor and you've been getting killed this whole time, eventually you're going to just give up. You're going to capitulate. You're going to sell all your stocks. You're going to buy puts. There's the market closing, by the way. We'll go check back in on the spiders in a minute, but you're going to start buying volatility. Well, what happens when a bunch of retail investors capitulate and buy volatility? They buy the VXX, and the VXX starts to outperform, excuse me. So it can be indicative of a market rolling over at the highs, and can be also indicative that the market is close to a bottom. Now let's look at the spiders here. So I said over the weekend and on Friday that at this point, we probably get down here and test that 400 level. Based on that correlation I've been showing you, I don't need to go over it again, I don't think, but essentially it looks like we're going to probably test this 400 level. Anytime you get close to this major gap or a major gap like this, especially one that's never been back tested, the gap will act like a magnet. You also have this lower trend line, so a sell-off would take you right there. Look how it coincides there. And then if we really dumped out with like a panic thing, you've got the 100 moving average, and you got this master trend line here as well. So, a Pierce down to maybe 395 wouldn't be out of the question, but I'm thinking at this point, the market probably goes down and pushes and tests those lows. Now, if that happens, we probably put in some type of a major tradable bottom, hence why I was starting off this video with the VXX comparison. Also, the VXX also causes, puts cause VXX and volatility to rise. Take a look at the put chain here, 400 on the SPY, 162,000 open interest, almost 63,000 contracts traded today. Look at 68 at 405, 410, 84,000, 64 at 415. And then you look at the call side, and you've got your only notable calls are maybe this 32 at 430, this 46.8 with a straddle at 435, and then this 53,000 straddle at 440. So this is clearly a hedge at 440, and this is clearly a hedge. So you have equal contract numbers. So these are hedges. They've been sitting there for a while. I've been watching them. And this one might be the only one that's really a bet. This one too, but 19,000, 11,000, that's nothing. Especially when you compare it 50,000, 57,000, 64,000, 84,000, 100,000. You get the idea. There's tons of puts in the system. And I've been mentioning that for weeks. And, that's just the nature of it. So I think the next flush we get will probably be a good tradable bottom. Anyways, let's flip over here. Triple Qs. down 1.9% here on the day. The first sign of weakness really came from the semiconductors. We had a nice rally in the morning, but look at how the semiconductors really couldn't just get past the flat line there. So not a good look. Also Tesla down. We always look to Tesla for a leading indicator of risk, and Tesla just getting back to the flat line as the market was essentially, well in the green at that point. So weakness there. Also IGV, look at the weakness here in IGV. It does have a good level here though. Right in this range here. Now it probably gets a little bit lower since you bounced already and now you're coming back down. So it wouldn't surprise me if it flushed lower, especially if you had a panic. Who's to say it doesn't get down to that 200 week moving average, or maybe the lower, maybe there's some pivots down here in this range. It could get down there, but a weakness there from the IGV and taking out the lows, just like we did last Monday. So, SMH here took out the lows last Monday and now taking out these lows here on today. Same thing with the triple Qs. But again, first sign of weakness there, always look for those semis and IGV, which is kind of like its little cousin. That'll give you a good leading indicator. Anyways, flip over to Russell 2000, down 2%. Very interested to see what happens here. So if we roll over and we don't make a new low, remember, the Russell made a double bottom while everything else made new lows. Very interested to see if the Russell makes a higher low, or if it, maybe just pierces kind of this double bottom or triple bottom rather, and then moves higher. We'll be keeping an eye on that closely for sure. Dow Diamond here managed to scratch out a 3 basis point gain. So again, today, cyclical stocks, consumer staples are doing well. Why? The yield is higher. Take a look at Procter & Gamble, Coca-Cola, Pepsi. We've got Unilever here, AMB, Kim Clark. So these names are green right now. And the reason for that is we're in a risk-off environment. And, when the yield is higher, these stocks are going to perform better. Speaking of the yield, 10-year up 6.79% today. What a power move there for the 10-year yield. Blasting off here on the weekly chart. I had this going up to 2.4. I don't know if we get a pullback. I thought we would get a little bit more backing and filling. We could get a fake breakout depending on what happens on the Fed. Maybe we get a sell the news for yields, or maybe buy the news, I guess it would be for bonds. And maybe it pulls back in a little bit, but either way, yields on the move here. 30-year, not taking out the local highs, but getting very close. Huge move up 4.74% today. Speaking of yields, take a look at high yield. HYG here, getting smoked again. So not a good sign for the market. It does have some support in this range though, so we'll watch to see if it can hold up there, but just not a good look here for that high yield debt. All right. Let's flip over to Dow Transports. DJT actually held up okay today. Rails were down, and delivery names were kind of flattish here, FedEx, UPS, but the Jets did get a bid. That is off of the fact that energy came in a little bit, so Jets managed to scratch out a gain. Again, this red bar high will be key resistance there. If it gets above that, it can go right up to gap fill at 20 bucks. All right, XLF. Actually hanging on pretty decently. XLF was green, 1.26% gain today. Now the yield curve did steepen a little bit. The 2-year was down a little less than the 10-year. So that is good for financials. If the yield curve was to flatten, these would probably be well negative today. And actually broker dealers holding up okay too, scratching out a small gain, even as high yield debt got smoked. So these guys are the junk bond dealers typically. So high yield debt selling off is not good, but they held up today. So we'll give them the benefit of the doubt. XLE kind of pulling back here, down 3%, but this is just par for the course. 3% is normally a big move, but in this environment, it really isn't. So we'll see what happens here. You're going to have some support at the 20 moving average, but if this consolidates a little bit, maybe it wants to head back down to that 70 level if we get a sell-off in crude oil. Same thing on XOP, basically kissing that 20 MA. OIH still inside of this green bar, but a nice pullback there. All right, so crude did finish lower today, down almost 7%. We actually covered our SCO position, which is 2 times short crude oil, on Friday. We had a nice gain, 17%. Didn't want to risk holding into the weekend because who knows what kind of news we would have gotten out of Ukraine. But oil did pull back nicely. We'll see if it can get a bid off that 20 moving average. I would have actually liked to have gone long oil right here, but we went positive on Friday, and that suggests a little bit of too much consolidation to me to buy this 20 MA. But nonetheless, we'll see what we get. I think 95 is a good area of support. We kind of got to bounce off this pivot high here as well. So we'll see what crude does here. But this is a volatile asset right now, and it's very news driven. So be careful if you do trade it. Nat gas, really kind of a nothing burger today. Little test candle, and then finished inside of Friday's body. So nothing really going on there. Same thing with the dollar index. Not a whole lot going on. Big doji candle on the daily. Nothing really to speak of. Gold here. pulled back pretty sharply. So got that big engulfing reversal and then kind of two pause candles. So this coming in pretty sharp. Let's take a look at the GDX. Also, look at the volatility here, just up, down, up, down, up, down. Finishing off the lows, but a pretty steep pullback there in gold. So maybe that's a signal that kind of the fear trade's starting to subside a little bit, maybe a bit of a leading indicator. We'll have to keep an eye on it. Silver pulling back pretty sharply as well as SIL, silver miners. That's holding its 50 moving average there. Silver should have support, local support around 25 there. So there's that pivot high there, got the 20 moving average, and then this pivot as well. If it gets through that, you got that 200 moving average below. As far as precious metals are concerned, take a look at platinum though. Wow, down 4%, getting back to this breakout area. So it's got good support there, 250 moving average, and this previous breakout. So that should get a bounce there, but take a look at palladium today. Wow, down 15%. So maybe somebody knows something about, what if there's in the next 2 days a peace treaty between Russia and Ukraine? Wouldn't that be interesting that palladium all of a sudden just magically sold off? Maybe somebody knows something, but that's a massive sell-off. I have to check the short interest on this on the COT at the end of the week, but that is a big move here, getting support right here. This is your breakout area, 250 moving average. So this should get a bounce, but that would be very interesting if we get some type of positive news on the war front. That would be very suspicious. I'm sure the SEC will do its very best to investigate. Haha, I'm just kidding. Anyways, copper pulling back as well. So maybe a little fake breakout here on copper. We've been monitoring that. It really needs to get back above 463, or otherwise this is in danger of coming back in pretty sharply. All right, on to Bitcoin here. So Bitcoin's still stuck in this wedge pattern, kind of a nothing burger today, but guess what? Bitcoin's up 2.5%. There's Ether, flattish, it's up 1%. So crypto hanging in there. And again, we've been watching crypto as a leading indicator. If this gets a bid, again, it could be, telling us something about the market and about risk here. And again, it hasn't taken out this green bar low yet, so it's still, safe in my book. And it can still move up to that 44 handle in the meantime. But again, interesting to see crypto holding up. Okay, most of the crypto is flat. I mean, look at, these are all green, every single one of them. Doge, Litecoin, XRP, Solana, Cardano, Shiba. So a little bit of a different signal there from crypto, and always look to that for leading indicator. Anyways, let's flip back over here to the spiders, see what we did in the close. Really kind of a nothing burger. Maybe we get a bit of a pop tomorrow. The correlation I've been watching, the kind of little short-term cycle I've been watching says that we should get a pop in the morning, but probably get some more selling. So we'll see what we get out here. Again, that 400 level at this point, I got to think the market just wants to test it. The triple Qs, you'd be looking at about 303. I mean, maybe if it overshoots, you get to that 300 even number, but look at that all time. I mean, this is major level here, major level. So if we get down there, it would take a lot to push it through there without at least some type of a lower high or a big bounce beforehand. Anyways, guys, we wrap it up here. Thanks for watching. Come find me at carnivoretrades.com, and I will talk to you all tomorrow.